All right, what's going on, guys? I just want to do a quick crash course of the futures market, just real quick. Don't want to overwhelm everybody. It's a very complex market, but once you get it down, I just want to demonstrate the opposite side. You know, there will be losses in the market, but it's about how you cope with the losses. So, going into the weekend, market closed Friday evening, opens up Sunday. I typically don't hold trades overnight because it can gap, but I was down $600. But I don't look at it as a $600 loss because on the week I made $1,400. So really, it would be an $800 gain for the week. But I held my position. I was very worried that the market would retrace back. Again, it is going back down 600, but I do have complete faith based on the chart analysis here. Again, it is forming what's called a bullish pennant, okay, where market shoots back up. It is forming another bullish pennant up here as well. It's just a little wider, okay. And the reason why it's dropping like that, because I amplified my my profits here. I am trading 4 contracts, okay. So I'm going long 4. All right. So if I zoom in here, as you can see, it's forming another bullish pennant. So it's going back up to 520. It was a little resistance. Let's go ahead and dive into it here. See, let's go ahead and get microscopic, see what's going on. So it was a little pullback. Okay, it was a little pullback up here. It hit this zone here, just a little pullback. But we have a zone right here for it to deflect it off. So we're just going to wait for it to push back up, because you see it's going like this. And look right there. Look at that. It just shot back up. You see, it just fluctuated. It jumped from 560 to 440. Again, I'm trading 4 contracts. This particular market moves $10 a tick. Okay. Times 10 will equal 100th of a point. This market moves in hundredths. Times 10 will equal 1K, which is 1 point. Okay. So you've seen how that just moved 130, whatever, 5, 6, 120 in 2 seconds, okay? Reason being is because it moved 2 ticks, all right? Which in this case, it actually just moved half of a tick, because I'm doing 4 contracts. Okay, so yeah, it moved about 2 ticks, because 10 times 4, I'm sorry. So $10 times 4 contracts will bump it to 40. So yeah, it moved about 4 ticks. So it moves $40 typically on 1 contract, but I have 4. All right, so 16. It moved about 160, give or take. So about 3 or 4 ticks. All right, so let's go ahead. We just zoomed in. That's the microscopic look. We're actually hoping it breaks through this resistance line there. We're hoping it shoots up. Again, I was down 600, or I was up 700, but that 600 would have came out of my 1500, positive 1500. So I'll be positive 700. So we'll go ahead and zoom out here, go back to an intermediate time frame. This will be a 60-minute. Each one of these bars is 1 hour. I have faith in the market because it can't penetrate this support line right here. This is a nice little zone. Nice consolidation zone, lightning bolt pattern, catching it, shooting it back up. So if it lands here, I'm hoping to get back up here. I wasn't even supposed to be down. It was some type of technical issue where my stop wasn't in place, and I was able to get out with 300, but for some reason another order was in place. So when I go check, now I'm down 600. So in reality, this 520, I can just take 300 off of that because I made 300. So on the week, we're positive 4. Right now we're down 5. So we're still positive 900. So this isn't really a loss. This is just coming out of profit. It is fluctuating. Again, it can fluctuate $40 to $80 in a few seconds. Again, 4 contracts. I'm trading high leverage to amplify the profits here. So we're waiting for it to shoot up. Okay, we're waiting for it to shoot up. I know I was mentioning points here. This 57 Right here is 58. This is 1 point. So it's trapped right here in between an entire point. So this is 1 point. I'm waiting for it to hit my target up here because this is a big drop zone right there. So when it does shoot up, because you see it's rising slowly, okay? So when it does shoot up here, that'll be half a point, okay? Half a point is half of 1,000, which is $500, one contract. But again, I have 4 contracts, so that brings it to 2 or 2K. So that'd be 2K right here. You know, the target is 2K plus the 300 that we made earlier that we was able to scalp out of the market, you know, plus the positive 1,200. You know, so we're looking at an overall net 2,300. All right, that'd be 2 3. All right, so 35. We're looking at 3,500 positive. Or if the market starts going against me here and I don't see it moving up, I'm fine. We're taking that that positive 900 and we're trading another day. Positive 900 on a week is still a good day in the market. So, you know, we'll accept that. Again, it's not considered a loss because you still have a positive profit loss of 9. So it's still positive 900. Once you make a substantial amount of profit, you will feel more comfortable with slippage. You'll be able to handle riskier situations. But again, I shouldn't have been in this situation in the first place. It was some technical issue. The stop wasn't in place, so really it wasn't even my fault. But it is what it is. You know, I'm managing risk here. Instead of me getting out at 600, my chart analysis told me the market's gonna go back up, and you see it stopped here. It couldn't even penetrate it. Couldn't even pierce it. Big bounce right there. Okay. Big bounce off of a consolidation zone here. Lightning bolt pattern. It sent it up. You know, it's forming a big picture a bullish pennant. They call it a bull because bulls go up with their horns, and there's the bear market, and bears go down when they attack. So if it's the bear market, it goes down. So this is the bear's attack. Look how fast that is. You know, this is 58.50 to 58 or 57. So that's 500th. You know, again, that's 2K right here in 2 hours. That's how quick the bears slash the market. That's 2K right there. Okay, because each bar here is 1 hour. As you can see, I'm going to go over just one. So it's 11 a.m., 12 p.m., 1 p.m. So each bar is an hour. So I'm going to dive a little deeper. I just want to see what's going on in here. As you can see, it's fluctuating up and down. We're 5 minutes. We're deep inside the body right now, really in the trenches right now. As you can see, it is fluctuating. But look, it looks like it's going to go back up. We're waiting for that shoot. We're waiting for that to shoot up. You know, because it already kind of broke this high almost. So we're waiting for it to pierce through. There's a little pullback on that zone. As you can see, some green is forming here on the 5-minute chart. Really get a microscopic picture, 5-minute chart. We're looking for one more and we get that big move out. And again, I will settle with positive 9, but if I can get up to negative 200, you know, I end the week with positive 11. But if it does hit that 2K, we can end with a positive 3,500. Again, it's fluctuating. Went back 520. But again, we got some support right here. If it does go against me, we got some support. All right, so just to do some numbers here, that's just a bit quick overview of you know, of the actual market, and really showing it's not all winnings. You know, there's more to it. There's managing risk, how you deal with loss, you know, how you hedge your position. So let's just give you a brief overview of the capabilities of the market. So I'm gonna go ahead and exit out of this, and I'm gonna go to my simulator account where I can practice those high leverage trades instead of like 4 contracts. I have a trade where I bought 300 contracts. Okay, 300 contracts on oil is a substantial amount of money. It was down 20K. Now it's up $90,000. Okay, so my simulator account is up $90,000 on a very small move, on a $200 move. okay, on a $200 move, which was about 20 minutes of action. All right, so that's $200. But again, we have 300 contracts, okay? So 6, and then you just add 4 zeros. So 300 contracts can amplify your earnings to the point where you can make $60,000 to about $80,000 in 25 minutes. And you see the number right here. That's $84,000, or oh, it just bumped up $86,000, 400. So that's just the possibility